I recently ran a poll on my YouTube channel to see how many people in my audience are interested in investing in property, and the response was overwhelmingly positive. Out of the 333 votes, 85% of you said that you would like to learn more about the property asset class. Now I know, investing in property can sometimes feel a little bit daunting, especially in the beginning, but it really is not. And you can actually get started with less than 100 Rand. Now, while I personally do not have any experience yet investing in physical property myself, I decided to join forces and team up with two experts in the property space to create a two-part video series where in part 1, I will cover how you can make money and build wealth with property in South Africa, even if you are on a tight budget. And in part 2, where Tim and Justin will share their expertise in the South African property market and take us through some of the best property investment strategies that they've used to amass an impressive 2 million Rand in annual rental income from their combined 28 properties. And make sure to stick around until the end of this video, as not only will I show you guys a lacquer way to make some good money with a seriously powerful investment strategy that not many property investors actually talk about, but we will also announce a huge giveaway for you guys with compliments of Tim and Justin from the Money Reimagined YouTube channel. Okay, lekker. So let's see how you can embrace the prestigious title of property owner with less than 100 Rand. The first investment option is to buy REITs on EasyEquities. A REIT, or a real estate investment trust, is a company that owns and manages large property portfolios, usually mostly commercial property like offices, shopping centers, factories, hotels, or hospitals. Their business model is basically to buy and manage large quantities of properties to earn passive rental income. And a large portion of this income is then paid over to you as the investor every few months in the form of dividends. Now, it's important to know that whilst most of these REITs own the majority of their property in South Africa, some of them do also invest in property abroad. And this is really nice if you are looking for some offshore investment exposure. Now, there are currently 29 different REITs that you can buy in South Africa. And the great thing is, you can buy all of them on EasyEquities, which is one of South Africa's cheapest investment platforms. You can either download the app or just use a web browser. And the best thing is, you can get started investing with just as little as 5 Rand. Now, to help you get started, feel free to create an account using the link down in the description, where you will get a free 50 Rand cash voucher, and then watch my comprehensive tutorial over here on exactly how you can set up your account and use the platform. Now, there are generally 3 big advantages of investing in a REIT. Firstly, you can invest in multi-billion Rand companies like Growthpoint Properties, for example, who owns hundreds of properties both locally and abroad for only a few Rands. So this is great when it comes to diversifying your risk. Secondly, the company takes care of all of the hard work for you. They deal with the property management, business operations, and all of the admin hassles. So you really are basically just like a passive investor collecting your rent. Thirdly, your investment is very liquid, or in other words, easy to sell. Now, as a rule of thumb, you should always try to maintain a long-term view when investing in property, but it is good to at least have the option to cheaply and easily sell off your investment if you really need the cash. REITs are also required by law to pay out 75% of their income after expenses to their investors. So you can expect to earn a lekker, strong, passive income stream with REITs in the form of dividends. In addition to that, you also get the benefit of any capital growth in the underlying value of the REIT. So when you sell them in the future, hopefully you will stand to gain some good profits. Now, EasyEquities has the option to either invest a once-off lump sum or on a recurring basis. Investing on a recurring basis is referred to as Rand cost averaging and is one of the best and easiest methods to optimize your long-term returns. The second investment option is fractional property ownership, or in other words, owning a tiny share of a property in South Africa. And we can do this with an investment platform called EasyProperties, which, as you probably guessed it, is actually a sister company to EasyEquities, but they focus primarily on investing in the South African property market, mostly residential, but also some commercial property. Now, the nice thing about their fractional ownership model is that you can invest in property with just as little as R1. Yep, that's right. And the investment fees are also quite low. Now, there are basically two different ways in which you can buy property on this platform. You can either buy shares in existing properties that they own, or you can buy into an IPO, which stands for an initial public offering. This is basically just like a new property deal which EasyProperties makes available, and when the deal closes, you get allocated your shares. Now, of course, the advantage of investing with EasyProperties is that they take care of everything on your behalf. From the legal work, to the admin, to even the property management. It is all done. Your role as an investor is therefore completely passive. And the other major benefit is that because you only need R1 to get started, you can very easily diversify your money into multiple different property investments. So how exactly do you actually make money? Well, you will receive both rental income in the form of dividends and any capital gains that are made on the value of the property itself. 85% of the net rental income is paid out to you as a dividend in proportion to the number of shares you own. 15% is then kept to pay property expenses, and you can expect this payout once every quarter. On the capital gains side, EasyProperties have independent valuations done on all of their investments every 6 months, and you do get the option to sell off your shares once every quarter in order to realize your capital gain if you so wish. But again, we know that investing is a long-term game, and this is why it is generally recommended to hold onto your shares or property for at least 5 to 7 years. As you can see, EasyProperties really do take the hassle out of property investment and therefore give ordinary people a chance to get started with investing sooner rather than later. Now, I am still testing out this platform, and I will soon make an in-depth review and tutorial on how exactly to use it. So if you are interested in seeing that, then make sure to do the subscribes. The third investment option is to buy a property ETF, which stands for an exchange traded fund. An ETF is a fund which is traded on the stock market alongside all the other shares. The difference here is, however, that an ETF is made up of a basket of different shares. So instead of investing in a single property stock or a REIT, you can invest in a property ETF, which will give you exposure to 10 or 20 different property companies or REITs all at once. And this means that you will get much greater diversification on the same amount of money invested. And once again, EasyEquities is one of the best, easiest and cheapest platforms out there to invest in ETFs. They have many different ETFs to choose from, all of which focus on different parts of the market. Some focuses on domestic property such as the Satrix Property and OneVest SA Property ETFs, whilst other focus on foreign property such as the Satrix Ritway Global Property and the Signia Global Property ETFs. Now, before investing in an ETF, you may want to download the fun fact sheet on the internet, which will give you a full breakdown of things like the top 10 holdings, costs, past performance, and other related market data. Make sure that you are happy with the returns of a particular investment before buying it, and always remember that past performance are no guarantee of future performance. Now, the nice thing with ETFs is that they are generally very liquid, which again means that it's easy to buy and sell whenever you want. And once you've signed up with EasyEquities, it's really easy to invest in many other of the ETFs as well, should you ever want to expand beyond property investments. So how does one make money with ETFs? Well, again, you will receive both dividends and any capital gains that are made on the value of the shares within the ETF. Dividends are paid out on a quarterly basis, and EasyEquities actually has a great feature which will allow you to decide whether you want the dividends to be automatically reinvested or if you'd rather prefer them to be paid out to your cash account. Now, the overarching theme of this video is how to build wealth with property investing if you are on a tight budget. So far, we've shown you guys 3 easy ways to do this. But as promised, we also have a powerful bonus option for you, which is called rental arbitrage. Now, you can make a lot of money with this strategy if you do it right, but it does require a much more active investment role than the previous 3 options. So what is this exactly? Rental arbitrage is a clever way of making a lot of money from a physical property without even having to own the property.
Whoa!
Intrigued? Well, let's see how this works. Instead of buying a property and renting it out, as with traditional property investing, you instead rent a property, sublet it at a higher rate, and then pocket the profits. The most profitable way to do this is to let the property with Airbnb, since you can charge much more for short-term stays than for long-term rentals. Here's a real-world example of how exactly this would work. Let's say you rent a small 2-bedroom apartment in Cape Town for 18,000 Rand per month. The going nightly rate for short-term stays is between 1,000 and 2,000 Rand per night, depending on the number of guests. For example, 1,000 Rand for 1 guest, 1,450 Rand for 2, 1,800 Rand for 3, 2,000 Rand for 4. You get the idea. Now let's say on average you get 1,500 Rand per night and you can keep the apartment let for 2/3 of the month. This means a monthly rental income of 30,000 Rand. And as you can see, it is possible to get quite a bit more than this if you can keep the unit let for more than 2/3 of the time. But obviously, do bear in mind that you will have some few extra expenses to factor in, including things like electricity, Wi-Fi, Airbnb booking fees, and if you decide to use an agent to manage the rentals for you, an agent fee will also need to be paid. But remember, these expenses are all tax deductible. You will also need to outlay some of the capital upfront in order to furnish the apartment, so make sure that you do have some capital available for this. All that said, it is possible to make a lot of money with this strategy if you find the right property in a great location, because by doing this, you ensure that demand for the property will always be high, and therefore you can maximize the number of bookings that you can get per month. Now, one of the challenges of this strategy, apart from the extra work, is getting approval from the landlord. And you should absolutely always get written approval before undertaking this strategy. Otherwise, you might land into some nasty legal trouble. One of the benefits, however, from a landlord's perspective, is that you are obviously much more likely to take care of his property than a normal tenant. Your business basically relies on keeping your tenants happy and getting good reviews. So you will obviously be highly motivated to keep the property in top condition at all times. And of course, if the landlord is still unwilling to enter into such an agreement, you simply move on and find another property. So as you can see, one of the biggest advantages of the rental arbitrage strategy is that you do not need to own a property. This means that you can get started much sooner, since it is easier to rent than it is to buy, and your capital requirements will therefore be much less. It also goes without saying that the other advantage is that you can make a massive profit in a short space of time. Now, as explained with the rental arbitrage strategy, by investing in physical property the right way, it is possible to earn significantly higher returns. And through physical property ownership, you also get many other benefits such as massive tax breaks, access to creative financing strategies, you get your tenants to pay off your entire investment, and you have the luxury of full control over your investment. The catch? You have to commit more time and energy into this investment. Now, Tim and Justin from the Money Reimagined YouTube channel specializes in this type of property investment, and combined, they have over 20 years of experience. So if you're interested in learning how to invest in your own property and reaping the long-term rewards, be sure to check out part 2 of this video series, where Tim and Justin will share some of their most powerful investment secrets. And finally, just as promised, it is time for the huge giveaway. As part of this collaboration, I've asked Tim and Justin to make 200 copies of their powerful property investment course available to my viewers for absolutely free. This course is an in-depth walkthrough on everything that you need to know as a South African to become a successful property investor. All you need to do is head on over to their channel, subscribe, and comment on their video. I will share a link here in the info card and down in the description. Thanks for watching, guys. You must all have a lekker day. Cheers.